Hey everyone! Palantir stock has had an incredible run of late as it benefits from the rise of effectiveness of artificial intelligence. But what I was thinking would be an interesting video to do is answer the question if Palantir stock will surpass $100 per share by the year 2030. Right now, Palantir stock after its surge is trading at $16.18, so it would require something like a compound annual return of about 30% until it reaches $100 per share in 2030. So let me look at a few financial metrics to determine and answer if I think Palantir stock could surpass $100 per share by 2030. And the first thing I want to look at is revenue growth. And looking at this metric over the trailing 12 months, Palantir has done an excellent job of growing its revenue. It had annual revenue of around 900 million around July of 2020. That has more than doubled to close to 2 billion as of its most recent update. So top line growth is working out well for Palantir, and it's expanding from primarily a business that gets contracted by governments to now getting more and more enterprises to hire Palantir for its valuable services. Now, Palantir is very expensive and so is only affordable for the highest of revenue generating companies around the world, but the company is working to make its services more affordable and therefore reach a broader base of customers. And if it does implement that, which I think it can at least somewhat make its services more affordable, that can open it up to a wider customer base that includes more enterprises and fewer governments. And that's really going to be the area for growth for Palantir because there's only, there's less than 200 governments around the world. So in order for Palantir to experience long running growth where revenues go to 25, 50, 100 billion dollars annually, it really needs to expand into commercial enterprises more broadly. The next metric I wanted to look at for Palantir is total employees. I want to see where it is on the growth curve, and this usually signals a company's ambitions and where they see themselves going. And what I notice here is Palantir's employee growth has flatlined. It's at 3,850 and it's remained roughly the same all year. That means it's brought on, it looks like over the last 2 years, all of the people it feels it needs for the next several years. So it looks like hiring is done for the company, which I see as a good sign because it can now focus its energy on bringing these people on board, getting them, experience in the company and getting them seasoned and trained and out there improving themselves and going out making the product, making the service better. And they're not spending so much time looking for talent, spending time on human resources, and all that could be a drain on a company. And get it, to get its services really better and more effective and get it in more demand from enterprises. The next metric I wanted to look at is Palantir's net income, and it's made significant progress in this regard. It's delivered positive net income for 2 consecutive quarters after not achieving this metric for several years. Management has said it's going to be positive net income for the rest of 2023 as well. And given that it receives so much interest income and it has $3 billion of cash, I think as long as interest rates remain high, Palantir can deliver net income positive gap wise for the foreseeable future. And another benefit, if interest rates fall, and it should hurt Palantir's net income, then the stock price valuation could increase because valuations tend to have an inverse relationship with interest rates. So Palantir is in this kind of sweet spot in terms of its relationship with interest rates right now. The next thing I wanted to look at is cash flow from operations. And again, just like net income, Palantir is making tremendous progress here, going from negative 300 million in quarterly cash flow all the way up to positive 187 million in its most recent quarter. So it's gotten to the point now, and this is the benefit of no more hiring as well, is now that revenue comes in, The company's not going out and hiring more people and adding to its costs. And so this revenue is starting to flow into cash flow and profitability because it's not just going to new employees, right? It's going to the bottom line, which is very good news if you're thinking about stock price appreciation. And finally, I wanted to look at valuation because a stock price can increase from a few sources, but the two primary sources are profit growth, which is earnings per share, and then multiple expansion, meaning the stock price as a multiple of the company's earnings per share, which is what the price to earnings is, right? So if investors are enthusiastic about the stock, the price to earnings ratio will expand and thereby increase the market price of the stock, and vice versa, and the market price of the stock can fall. So I look at this as a source of growth or decreases in the stock price, and I don't think Palantir has much more room to grow its market price of the stock based on multiple expansion because it's already trading at an expensive multiple, a forward PE of 62.7. So in my opinion, the growth in the market price of Palantir stock is going to primarily have to come from growth in earnings per share and not so much from growth in expansion of its multiple. So, to answer the question after all this analysis, if I think Palantir stock can surpass $100 per share by 2030, I would say yes. My answer would be yes. If the company continues making the progress it has been making, it can surpass the $100 per share mark by 2030. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.